am calling from Prosperity Finance, sharing the best financial tips so that you can be more successful with achieving your financial goals. Recently, I have a client ask me, how come there's many people own so many properties, but I can't borrow more to buy more rental properties? Well, the biggest change over the last couple of years is the bank policy. Now bank has tightened policy so that you can't borrow as much as before. In fact, you can only borrow only a fraction of what you can use to borrow. In that example I just mentioned, if he borrowed 2 years earlier, he probably can borrow up to 5 or even 6 mil, whereas now he can only borrow up to 2 mil. With the same situation, same income, same household, everything's the same. What's the difference is the bank policy. And also in the past, obviously property are cheaper than buying now. So with more borrowing power and access to cheaper houses, no wonder, some people can used to own, more than 10 properties, whereas now once you purchase a couple properties, you probably reach the glass ceiling. Today, I have really good news for you. If you are thinking, how can I actually borrow more and buy more property? I know property market is flat, but I know it's a long-term game. So as long as I'm buying more, then I'm still kind of building my property portfolio. I'm still getting close to my financial goals. So yes, so definitely we have some really good news for you. So please stay with us. I think the best way to demonstrate this is to show you an example. So let's firstly share with you a file. Okay, so in this case, I have to hide the name of the client for confidential reason. But the background of this client is that, let's say they are Mike and Mary. Now, Mike and Mary are a married couple. They have 2 kids, and they are quite successful in terms of their corporate jobs. They are making together about 180K a year gross income. And on top of that, they own 2 rental properties, and they have a family home. Now, their current lending is around $1.7 million. Now, they are looking to purchase a property and want to borrow about 400K. They went to their bank ANZ, and unfortunately, they got a decline. However, the good news is that when they come to me, we not only help them, secure the lending, what they need, but also make them aware they can actually buy more because they can borrow more. That's why I want to show you this secret, because you might have the same issue and we probably have a solution as well. So let's have a look. So for these clients, let's have a look. What's the different borrowing capacity from each banks? So ANZ can approve up to 320K, but client asked for 400, so that's why they declined. ASB very similar, 350K, BNZ 330K, Westpac 720K. So it looks like double the other banks. But look at the other 2. One is Bank of China. They can approve up to 1.1 million. And another lender called Select. They can approve even more. Now, if you compare the highest, which is 1.17 mil, with ANZ, for example, 320K, it's almost 4 times. So it's a huge difference. Well, the reason they have such a big difference is because how the bank calculates existing home loan repayments, and also how they treat the minimum living expenses. So let's have a look at each of them. You may wonder, what do you mean by existing home loan repayments? I'm actually paying the same amount every month, and I can even get my rent cover the mortgages. So how come I don't have a borrowing capacity? Well, that's not how the bank see it. When the bank calculate your borrowing capacity, firstly, they will actually look at your current commitments. So your current home loan, they need to work at a really high interest rate to sensitize your borrowing capacity. So even though you are paying $7,000 a month for the home loan, but in reality, if you look at ANZ, ASB, BNZ, they actually allocate $12,000 for your home loan repayments, so $5,000 more than your actual payments. Whereas the Bank of China and the Select, they only allocate $9,685. The other one is $10,000. Okay, so it's much less than the other Australian banks. Have a look at the living expenses as well. Now, in the past, the bank work out the living expense based on your family structure, i.e. how many adults, how many cars, how many kids you have, and then they will have a minimum living expense allocated to you. Obviously, if you spend more than that, they will use yours, but if you spend under that, they still use theirs. Okay, so the number here are just the minimum. So I haven't taken into account customer own declaration for the living expenses, but to be honest, in this case, they spent around $2,000 a month, so much less than the mainstream bank minimum. But if you look at the Westpac, for example, and even Bank of China, it's only $1,800, which is almost a half of what ANZ living expenses. No wonder Bank of China has more surplus to support the new loan. So these two actually cause the biggest difference. So Bank of China and Select are the solutions for a lot of people. You probably can't get any approval on top of your existing loan, whereas with these two lenders, you can actually borrow much, much more. You probably, with that kind of amount of lending, assume you have enough equity, you probably can buy 2 more rental properties. So it's definitely doable. Now, Bank of China, a lot of people are aware of that bank, but only until now, they start focusing on local market. In the past, they purely work on the overseas income. So Bank of China actually really aggressive at the moment, how the policy is set, and even the rates are so attractive. They are even more attractive than the mainstream bank. For example, if you see like 3.89 or 3.85 for 1 year, they're doing 3.79, for example. So much, much better than the mainstream banks. Okay. Select, on the other hand, have a similar borrowing power. The beauty about these products is that they can take into account other income, whereas mainstream bank don't take into account. For example, like bonuses, overtime income, or if you have a family tax credit, those work incomes, benefits, they take into account all of them, whereas other bank won't. So that might be a game changer for you. So Select is really good at taking into account a lot of other incomes. Also, Select is really friendly in terms of credit conduct. If you unfortunately have a default on your accounts, maybe your past bill or your bank statements has some unarranged overdraft, etc., they don't care. They're really friendly, and they don't really take into account. So you may got a decline from the bank because of account conduct or defaults, whereas Select actually very happy to lend you money. So both are really good. Depends on the situation. Select is more pricey than Bank of China, but also still very affordable. If you can fit the main bank, still go to the main bank, and we're happy to help you get the main bank deal. But if it doesn't fit, then we'll look at the Bank of China or Select, and it's more about solution as opposed to rates, whereas Bank of China actually quite good. They have the best of the both worlds, the pricing and the solution. So very, very good. So if you are struggle, getting a loan from the bank, or not enough for you to buy another property, hey, come talk to us because we do have a solution for you. Don't miss out the opportunity of growing your wealth. If you really like this content, please feel free to subscribe our YouTube channel, and we will keep you posted for any latest news or policies or product like this. Okay, thank you so much for watching. I'll see you next time. Bye for now.